Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 6th of January. So this year we start off 2020 with quite a different risk sentiment to where we ended last year. Last year we ended the markets with a very strong bull note with very much a risk-on approach. Markets really responding to the US and China agreement for a phase one trade deal and pushing markets up to those US markets up to all-time highs. Coming into the beginning of this year, we've now sort of seen quite a risk-off approach coming through the markets with concern over the US and Iranian tensions, which have been escalating over the past few days. So let's take a look at a few markets here that we're keeping a close eye on for trading opportunities going into the start of this week. Now, if we come and have a look at the Dow first of all, and take a look at this on the daily time frame, we can see the retracement here, quite sharp retracement over the past couple of trading sessions. The market's sort of testing, it's come down, it's bounced off the previous low of the higher low here in the structure of this daily trend. So if the market pushes down below the current daily low today, then that's going to break this trend and it's going to be quite a different sentiment here on this market. If we come down to the 4-hour time frame, you can see this a little bit more clearly. You can see on the level through here is pretty much well tested. It's around 28 sort of 350. You can see that's quite well tested through here. Again, if the market breaks underneath this level, then it kind of opens up a new trading window to the short side down to around 28,160, which again has been quite a key level on this market, as you can see through here. And there's not a lot of support or resistance in the way down to this sort of lower level. So if the market does manage to break underneath here, our sort of focus will be down for intraday opportunities, down sort of closing this window here, which is a good few hundred points. Now, of course, if the market does manage to hold above this level, then we may well start to see some buying activity coming back in. We may well see this long trend sort of continuing. But at this moment in time, that's not easy to see if the risk sentiment stays in very much a risk-off approach as it is at the moment. Coming over to precious metals like gold, for example, we managed to have some very nice trading opportunities on gold last week in the trading room when the market sort of extended extended this sort of run. Now the market's now looking quite extended here on these higher time frames. So our preference really is to wait for retracement areas here on these markets and look for more value entries rather than trying to get in at these highs at this moment in time. Now, when we come over to currency markets, there's a couple that are looking quite interesting. Certainly the Aussie dollar and the Kiwi dollar are markets that are quite keen to us at the moment. If we take a look at this on the daily time frame, you can see that the market's been in the context of a long trend. It's pulled back into some key support here on these higher time frames, and we're also back into value areas here on the daily time frame as well. Now, if the long trend continues, we've got this sort of 70 level up here and possibly even beyond as the trend continues. Now, if we come down to the 4-hour time frame, you can just see how many times this lower level has been tested. This is the low of that current daily candle. So if the market breaks below this level, it's been tested several times before. That's going to show some real weakness coming into the market. So of course, if that happens, this is going to really break the sentiment of this market, and we'll see a much deeper retracement. It's a very similar story when we come and have a look at the Kiwi dollar. Again, taking a look at this on the daily time frame, looks nice and strong here. It's finding support back here into the value area on the daily time frame. Again, if we come down to the 4-hour time frame, you can see how well tested that level is through here as well. So again, a break underneath this level sets this market up for a much weaker and much deeper retracement. So again, we're keeping a very close eye on this, and there could be some nice sort of long opportunities if these long trends continue. So if you like the methodology that we use for analyzing the markets, and you're interested in learning to trade the way that we trade, then you can come along to join the trading bootcamp that we're running here in conjunction with Blackwell Global. So if you come to the Blackwell Global website, come to the education tab, come down to the learn segment, and then you can click on trading bootcamp. This brings you through to this page, and you can find out more about the trading bootcamp that's run over 4 sessions here through the course of January and the beginning of February. It's completely free of charge to join. All you need to do is you can click on the reserve your seat and sign up to join. So that this session starts on the 13th of January, and again, if you'd like to join us, this is completely free of charge to join. So I certainly hope it helps, and look forward to speaking to you next time. Bye for now.